The latest spike in Bitcoin prices, which soared to $73,000 mid-March, has brought attention to a distinctive monetary phenomenon in South Korea. Kimchi premium refers to the value at which cryptocurrencies trade in South Korea compared with international exchanges. Demand is driven mainly by retail investors, since institutional and foreign investors are not able to participate freely. The premium has seen Bitcoin and other digital currencies sell at as much as 10% higher than in other exchanges around the world, and in some cases much higher than that. In 2018, for example, it topped out at over 54%. It's a particularly appealing phenomenon for traders who can get more for their coins that they purchase on a different marketplace. This is called arbitrage. But Kimchi premium is regulated. It has been limited to South Korea nationals and foreigners with the residency in order to cap arbitrage opportunities for outsiders and prevent money laundering. Let's get more on this now with Naeem Aslam, who is Chief Investment Officer at Zay Capital Markets, and he joins us now live from Dubai. Thank you for being with us, Naeem.
Thank you for having me.
Can you tell us, first of all, a bit more about what is arbitrage, and especially what is arbitrage in the crypto market and how can it be exploited?
Thanks for having me, and it's great to be on this particular segment, given the fact that we were involved very much right at the beginning of this particular curve back in 2017. So basically, by definition, arbitrage, you're trying to make money for the same particular derivative or asset class on two different exchanges or on two different platforms, buying it on one platform at a lower price and then selling it on a higher price. Now, this is not something very unique because it existed in the financial markets back in days when there wasn't enough liquidity, when there wasn't enough great period of transactions, because it all depends how quickly can you really do your transactions. Now, the problem with blockchain and with cryptocurrencies is always about being the scalability issues. You cannot do too much of transactions, too many of those particular transactions, but there are technology advancements which are taking place. Like, for example, if you look at Venom Foundation, which recently again made a huge wave in the crypto industry space by using sharding and producing over 100,000 transactions. So the more transactions you can have per second, per minute, the easier it would be to have those particular transactions, and the narrower the margin will become. And I think in this particular space, we still need more innovation, just like I mentioned, like how Venom has done by using sharding, and that particular gap will continue to narrow. Back in days in 2016 and 17, that gap used to be pretty huge because of the timing that when Bitcoin transaction will take place and when it settle. And that timing is getting narrower and narrower because of the advancement in the technology.
But is this gap and this arbitrage possibility dangerous to an extent? Do you think authorities will do something to try and regulate it, or not necessarily?
Well, look, I think regulation is already here, and regulation is certainly good. If we speak from the region where I am based now, but where I'm now not based in here, based in London, Dubai, of course, there is a very good regulation, great oversight of in the whole process. Because of that, it is attractive. It is attracting big players like Coinbase, Binance, and everyone else. They are based over here. So I think we are seeing a gradual move among different lawmakers where they are making regulation as a necessary part of this particular ecosystem, because one of the particular areas when it comes to arbitrage is the final settlement in what particular currency that you are going to do. And there lies your regulation issues. Now, with the fact that now we have a Bitcoin ETF approved, and before Bitcoin ETF, everything was just in the realm of speculation. Many people were questioning whether Bitcoin will exist, but now we know it exists. So these two particular issues, number one is the scalability issues, the transaction, as I mentioned, the sharding, the companies which are working on that will improve. And secondly, lawmakers will also implement the right necessary laws in order to mitigate those particular concerns about anything to do with ML.
Interesting. One last point on South Korea, because there seems to be more demand for cryptos in general in that country, and especially retail demand, not necessarily institutional. Why do you think that's the case?
Well, look, again, I think when we say more demand, it is more about in relative perspective. Look at the number of exchanges, look at the number of crypto companies, the
Right.
established crypto companies which are based in South Korea and which are based in Dubai. And why are they based over here? I think there is still lack of regulation, which is because of that, this particular gap exists. Why are we not seeing huge gap in terms of arbitrage opportunities within in Dubai versus, let's say, the Europe or versus US or any
Right.
other particular company? So that is the pretty much focus.
Great analysis on the crypto environment. Naeem Aslam, thank you very much.